So good morning, Matt. Good morning, everyone. We are back for our Thursday morning SportsFX currency update. How are you?
Really good, mate. Just a weather check as we did yesterday down here. Much better this morning. The sun's out. It's crazy times in the weather patterns down here in Sydney at the moment, mate.
Yeah, no, we're the same. Actually, we got the sun out. I'm back at home. So I was a bit hot desking yesterday. I was all over the place. It just didn't feel right when I was at my own desk. So back to normal today, which is great. And the currency market's a bit like the weather at the moment. It's sort of up and down depending on which one you're looking at.
Yeah, as we said earlier on, and we'll get into it now. There's been a couple of interesting movements, especially when we're talking about the yen. But we'll have a look at the euro against the AUD at the moment, mate, and see what's occurred overnight there.
Yeah, I'll bring up the chart. Before I do so, earlier in the week, I think it was Tuesday night, the German inflation figures came in. So as you would know, like Germany's basically the biggest driver of their economy in the EU zone, and they have been struggling a bit. So it's now at its lowest level since January 2021. Their inflation came in at 1.8%, down from 2% in August. So a couple of comments overnight from some of the big banks, Barclays and UBS being the main two that are looked at, and they're expecting the European Central Bank to cut rates coming up, in the next couple of months. So that's a concern if you're holding euros or earning euros. Good if you're holding Aussie dollars and need euros. So I'll bring up the chart and you can sort of speak through, the visuals here. As you can see, up and around here, we were looking at, as we talked about the other day, reaching that 62.40 mark, which we've sort of touched now 2 days in a row. So that's June and July this year where we sort of touched that high. Had a huge sell-off back around that Japanese carry trade week or couple of weeks where everything sold off, and it's recovered. So I'll put a bit of a marker on here. So since the 6th of August, it's recovered just over 5% back to where we are now. And again, the last 2 nights we've touched that 62.40 and just not been able to push above it or stay above it. So I think if we do see the ECB looking to cut rates and the Aussie keeps on this sort of upward trajectory, we should then be looking at passing that 62.40. And what we want to really see is, again, if you're holding Aussie there, is can we sort of, break above it, come back and retest it if you like, and just find that is now a new level of support before we go higher again. So if you're Aussie buying into euros, this is the sort of pattern you want to see. You really want to see it break above here and hold. That'd be a positive move if that was the case.
No, definitely. Do you want to move on now? As we're talking about earlier on, mate, some interesting comments overnight around the Japanese yen based on the conversation we had earlier in the week and some of the thought processes around the new Prime Minister.
Definitely. So yeah, we seen, as we said, I think it was Monday morning, we talked about it. So there was there's a new Prime Minister or incoming Prime Minister they're expecting who was going to be an interest rate hawk. They thought he was going to come in and raise rates. And we've seen the yen strengthen about 2% on Friday. That's when we broke down that 5-minute chart and we just seen red. But yeah, it's overnight again though, and this is without anything actually happening. This is just them talking, and you see the moves in the market. So overnight, the incoming, Ishida, his comments were rate hikes are off the table. On top of that, the current Prime Minister, he said that Bank of Japan, they're still not looking at raising interest rates until the markets stabilize. And the Japanese economy is still recovering moderately, a little bit weak. So what you've seen here is a 2% sell-off in the yen overnight. So that was against the Aussie, it was against the US, it was against the pound, and it was against the euro. Just across the board, the Japanese yen sold off. So having a quick look here, and again, I've just marked this up. I found it quite interesting. So since sort of July, through to where we are now, it's been a 7% decline, overall. So like that, if you're earning yen and sending it back, that was, it's been not great. It started to recover. But at the moment, on the flip side of that is since 16th of September, so we're only talking 2 or 3 weeks now, you've seen almost a 7% increase in the Aussie yen. So if you're going the other way and you've got Australian dollars and you need yen, again, overall, it's fantastic. It's back above that 100 mark. And these comments around the central bank and the incoming prime ministers around their interest rates, again, it's a bit of a theme. It has been all year around the US, Australia, pound, everyone. They're all teetering on what their central banks are going to do, and that's really driving the currencies at the moment. And even though it feels like we sort of it was a bit in the background for the past couple of months, over the past couple of weeks, it seems like it's really come to the forefront again. So between inflation and interest rates, it's a real key driver of what's going on currently. And also just that continued uncertainty around political events that we keep seeing in the world as well. So yeah, just to obviously be mindful, be careful, and have a look at these sort of moves and see how they work, for or against you.
Spot on, mate. I think that's the key point. Have a cursory look, get in touch with either yourself or myself. We can talk them through it and build out a strategy for them in and around movements either way.
Yeah,
And,
yeah.
as we spoke earlier, we'll put a little case study up a little bit later on, just showing what the difference is over a 12-month period on a 1 cent movement, which is quite incredible, and it's visual to see. So let's go
Yeah,
to our table, mate. Let's have a look at our USD against the Aussie dollar.
yeah. Well, that's done the same in regards to it's just been going sideways. It's that I'll flick back out here. We look back. This is June and July 2023. So as we spoke about earlier in the week, we were reaching that 69 cent mark. It's had a big run up. So again, from 6th of August, we're 7%, up. We're up from sort of 65 cents to 69. It has stalled out here, however. It's like 1, 2, 3, 4, 5, 6, 7 days in a row where we're 68.90 to 69.20. So a really, really tight range. Very much like the euro now, and putting that up there is, can we get it to, break into this area, this 69, stay above it, and then can it go? It'll test 70. Same thing. If it gets above 70 as an input, you want it to stay above it, and then can it go again? So that's the sort of the ideal pattern if you're holding Aussie. But at the moment, as I said, it's sort of breaking in here, closing back out. It just says it's just not ready. But overall, and same thing. There's talks. They cut their interest rates obviously in the US a couple of weeks ago by 50 basis points. There were talks about another 50 basis point cut. That's sort of been curbed a little bit. I think the futures market's pricing that in at about 30% now, where it was close to 60% 2 weeks ago. So maybe a 25-point cut they might look at. But yeah, it's all just key around this 69 cent zone. And I reckon over the past couple of days with the escalation in political issues is that's why we're not seeing much movement. I mean, we also have a quick look sometimes at like a gold or an oil. Just to see what they're doing in their markets. And again, overnight's been a bit flat. So I think just uncertainty at the moment. People are just sort of sitting on their hands.
No, I think that's right, mate. As not only those geopolitical issues as they potentially ramp up, the imminent election.
Yeah.
The markets are holding. They'll want to see the outcome of that, and those implications, and then we probably will see a movement, if you like, in that USD.
Yeah, that's again, that's about 5-6 weeks away. So we're probably between what's going on in Israel, between the US election coming up, and constant inflation and central bank comments.
Yeah.
There's just so much uncertainty, probably for the next 4 to 6 weeks, that you might see wild swings. You might see very little swings, but it's probably a good time actually to take some stock of what you're doing in regards to your business. If you're a business, if you're an athlete, is just looking ahead and going, how can I? Probably the best way to put it is, how can I protect myself from what's about to happen? And I was having this chat with a friend yesterday because he's an importer, and my comment to him was, if you say you secure some funds today, if the rate goes up a little bit more, you don't actually lose any money. You just lose money on paper. But if the rate goes against you, you actually physically have to pay more money out of your pocket. So while the upside, you might think, oh, I've missed out here, you're still just protecting yourself. And if you're running a business on a day-to-day basis, or you're an athlete, or you're sending money home for a mortgage that you're paying on a monthly basis, whatever it may be, I think that protection is a lot more important than potentially catching some upside when there is so much uncertainty.
No, that's a brilliant point, mate, because it is real on the downside, paper on the up. That's spot on. And again, it's like anything. We've got athletes all around the world. They may be moving money in between jurisdictions, not necessarily bringing it back home to Australia. So
Yeah,
it's that whole currency plan, looking at the euro or British pound up against the USD, where they're out of Japan into Europe,
yeah.
taking into consideration all those key indicators plus the political landscape at the moment, and putting a true plan in place to, as you say, protect the here and now.
Yeah, and like that with athletes, mainly it's one contract might be in Japan. The next one doesn't mean it's coming back to Australia. It could be in the UK, it could be Europe, could be
Yep,
America.
that's right.
So having that 360 view of those major currencies and what's going on, and as you say, being able to sit down, and we've done it a few times where someone's given us a call and said, "Look, I'm potentially going to be signing a contract in this country. What do I do? How do we then start receiving Japanese yen, or how do we then start receiving pounds because we've never had to do it?" So that's an area as well. It's like, all right, it's preempting. It's trying to be prepared. Give us a call. This might happen. If it does, this is what we do. If it doesn't, don't worry, we can do something else. So just being aware of your options. And on that point, I'll bring up another look here I was showing Matt earlier. So this is a real basic look at when we looked at that Aussie US before. If you're a business and your volume is, just say your purchases are $1 million US a year, just using a fairly low number for a lot of clients that do import in US dollars. The price over the past 4 to 6 weeks is at 65 cents. That'd be costing you 1.538 million Aussie over a 12-month period. At 69 cents where it is at the moment, you'd be 1.449. So I said that's a potential difference of almost 90,000 Australian dollars and as we said, it's it's sort of in your back pocket. It's not floating around at the mercy of the markets. So this is where sitting down with ourselves, your currency broker, your bank, as I said, whoever you deal with, is this is how important it can be. Those little small movements that might not move enough and look like a big move can add up to a lot of money. And this can be a house sale. You might have a $1 million house purchase in the US happening, and 4 weeks ago it was costing you 1.53. Today it'd be costing you 1.44. So like that, if you're selling shares overseas, buying property, you've got an inheritance coming in, just have a chat, have a look, put a bit of a plan in place to see how that can potentially affect you.
Definitely. It's funny. I was having a conversation with another partner of mine yesterday. A lot of business done out of Europe and sending, exchanging euros into the AUD, and just the cost of when they do that with the bank transfers and so forth. And I said, well, we need to look at that and build a plan around what that looks like, because it has a material impact on the business here in Australia if those funds aren't coming back, because there's bank fees that are holding up that transfer, not the exchange rate per se. So the actual mentality piece is the wrong way around. So talking to them and just taking them on a gentle, generic education, class, if you like, just on what an FX piece looks like and the impact it has on their bottom line in business. So, it doesn't matter who you are or what you do. If you have a need to move money either way or between countries, we're here just to help and educate.
Yeah, that's right. There's a lot of different ways you can do it. There's a lot of different plans you can put in place. There's probably a few different providers that might work better than others, depending on which country you're going into and how often you're sending funds and where they need to go. There's a lot of boxes that need to be ticked, and as I said, Matt and I have got lots of experience in that field, and we're happy to guide you the right way.
Done.
Mate, well, that was it was a good currency update. There is, as flat as it may be, there's a couple of good key points in there. So yeah, anyone who's in this area that needs assistance or just wants to chat around what they're currently doing, and then we're happy to give like a free health check on what you're currently doing, and if there's any way you can improve it, feel free to reach out to us.
Definitely. Good speaking to you again, mate.
You too. Have a great day.
You too.